All right, we should be live now. What's up, guys? Let me just pull up the stream here actually and just make sure we're all set and ready to go. Um, actually, yeah, we'll just go ahead and start. What's up, man? How's it going?
Doing great. Doing good as always. How are you?
Doing well. We're gonna get started here. I'm gonna share my screen. We're gonna just jump right into some charts in a little bit of a pullback here. I've got actually a ton of charts to share. I did a market update last night and I covered a lot of um, legacy stuff, but we're going to start out with Bitcoin this evening. Um, so one of the things that I covered in the legacy market update yesterday evening was this decorrelation of Bitcoin with S&P 500, which is super interesting because up until 2022, well, we really started seeing it in the bull market, right? Or after COVID. But prior to that, there was not necessarily a high degree of correlation with Bitcoin and the S&P 500. Really, even all through the last bull market, we saw periods of high correlation and periods of negative correlation, slightly correlated overall, but I would not look at this and say those are two very correlated assets. I would say that they have quite a bit of decorrelation and quite a bit of negative correlation. Then once COVID came around, we saw that correlated narrative start to kick in, right? We saw periods of decorrelation in line with China banning Bitcoin mining, right? And then the last big decorrelation event was FTX until now. Now we're actually in a period of time where we have negative correlation between Bitcoin and the S&P 500, which is very interesting. And one of the narratives that may be playing into that is the Chinese money supply versus the US money supply. So the US money supply going down, Chinese money supply going up, which is bullish for Chinese stocks, right? And this is the addition of the two, right? We see the overall US plus China money supply going up in correlation with Bitcoin's last, month or two of increased price action to the upside. So we may be seeing a bid out of China for Bitcoin, which is a narrative that I've seen taking over in the media a little bit. Let's jump over to, we'll just give a brief look at the S&P 500 sitting at the crux of these two support levels. Obviously, this was our peak back in January of 2022. We've gotten a little bit of a bottom, potentially the inverse head and shoulders. Personally, I think we have one leg left upwards, but I'm not married to that idea. I could absolutely see a scenario where we do break this support and we go down. But in general, I'm a buyer of support, seller of resistance. I expect to hold support until proven otherwise. So I do think we could very well have one last leg up in the S&P 500. If not another one after that, but at least one more is kind of my base case. But again, not married to that idea. Covering Bitcoin here. Bitcoin's just been developing upwards accumulation. Oftentimes, when you see a period of accumulation to the upside after an uptrend, right? Now, notice you get these bear flags here after a downtrend, right? After a drop or a crash, you get these periods of accumulation to the upside. That's a bear flag and can oftentimes mean price movement further down. But once we've exploded into this uptrend, broken some downtrend lines, broken some bear market structures, and then we start to accumulate sideways and with a bit of tendency towards the upside, that to me is bullish. But again, we got to be very careful here. This looks like it wants to break out to the upside. In terms of, I'm not talking about a immediate term. I'm not talking about, we could very well come and test the bottom of this trend line first. But this does look like it wants to break out to the upside off of this continuation pattern. Strong move upwards, consolidation, slightly tilted to the upside. Looks like continuation for another leg. But again, we need to be very careful here. It's a very uncomfortable time. It's a very pivotal time. Again, I know we just talked about having negative correlation at the moment with S&P 500, but if we go back to that chart for just a moment, and I might have, this one right here, right? We may be at negative correlation right now, but just note that all the way since 2020, March of 2020, really, with COVID, we've had a high degree of correlation with the S&P 500. So if the S&P 500 is in a situation where it may break support and fall back into this gruesome downtrend, and this is just a deviation, then that is no bueno for risk assets in general. Taking a brief peek at DXY, this is the dollar currency index. We want to see DXY go down, right, in order for risk assets to do well. And we actually got a rejection, or an initial rejection, from the back test of this uptrend line. And that's exactly what we talked about wanting to see. We wanted to see this rejection. It was actually a pretty strong rejection. We pumped pretty hard into it. And then yesterday, well, it's pretty much today, but we've opened the new candle, the new daily candle. But pretty much today, we got a hard rejection from the backside of that uptrend line. So this is back test, and usually you get further downside here, which would be bullish for risk assets, and set up one more leg for risk assets. So that is the general thesis for me right now. But again, we need to listen to what the charts are actually saying, not just get married to a fundamental idea. And what the charts are saying right now at this moment, in my opinion, is that in general, we should see, or we're setting up to see, another trend upwards, or another leg upwards. Now, for Bitcoin here in the short term, we have gotten quite a decent pullback here from the top as measured. It's about almost perfectly 10%. If I were a buyer here, I'd be looking to strictly buy the trend line as a swing trade with very clean, clear invalidation if we break this trend line, right? So if we pop back down, hold resistance, that's the trigger to actually get short. We lose this trend line level. So very, very basic technical analysis there. I'm not getting too fancy with levels. I know Paul's going to talk about levels and particular, give some more particular specific levels. But for me right now, just paying attention to some trend line stuff. Now, recently, off of this local low, we can project our margin pressure levels. We see support at 23.2. It was held somewhat sloppily, but for the most part, it has held with quite a bit of price action in the daily wicks coming back down below 23.2. If you were looking to take a shorter term scalp, you'd look for support to hold at 23.2 or so. If we move these up a notch to our most recent swing low, right, we saw 21.7 ended up holding as a support, and 24.4 came in as a little bit of resistance, although we did deviate above it quite a bit. And I want to move this up to our most recent swing low around 20K or so. And again, we kind of get this band of resistance here around 24 to 25, and resistance all the way up at 27, but kind of nothing in between. That gives us any inkling of idea of where we may find support. Before we go to Paul, I do want to give some support levels off of our local high, right? And I'm actually going to, I'll remove drawings, I'll clean this up. I'm actually going to add some higher leverage levels so that we can actually see. The 10x level came in pretty much perfectly, especially if we move to this more recent local high. Actually, we'll go back to this one. It's a little bit cleaner. That 10% pullback right down to the 10x margin pressure level, short margin pressure level. Let's actually show these labels, indicators. There we go. 10x short margin pressure level. You can no longer short on 10x leverage and hide that liquidation point below this most recent high. Obviously, these get pretty crowded here as we come down, but as they start to space back further down, we do see 21K, 20.2, 18.9 has been a really big level for us in the past. And that's a level that if we do get a larger correction down, I'll personally be bidding. And then 16,846 is interesting as well, coming in here as a support level. So yeah, for Bitcoin and just the market in general, I am looking for a bounce here. But if we don't get that bounce, I'm very cautious and have tight invalidations to the downside, where I'd actually be looking to take some shorts until we can get back to stronger support levels at around 18.9, where I'm a little bit more comfortable bidding. I'll kick it over to Paul to talk Bitcoin and ETH. And then once he talks ETH, I'll go back into ETH myself.
Going back into ETH, huh? Once you go ETH, you don't go back, man.
For sure.
um, all right. Somebody's got a. I was talking to somebody in the chat here. Just set. I was curious. I haven't heard about any cheeky crypto. I guess they're asking if we seen cheeky crypto's idea on the lows, which sounds like he's anticipating new lows. I don't know if you have any feedback on that. I personally haven't seen it or don't know necessarily what that analysis is, but
New lows. Yeah, look, I mean, uh, I think there is a high risk of a credit event. I think there's a high risk of recession. I think there's the yield curve is extraordinarily inverted, and that does spell recession for the overall economy. I don't know if China opening up their economy or not is going to be enough to maintain Bitcoin's price at these higher levels. So new lows for me aren't off the table, but they're not my base case in the immediate term. I think recession could take a little bit longer to develop. We've yet to see the Fed actually start to pivot. Usually new lows or the bottom of bear markets for the S&P 500 come in after a Fed pivot, 3 to 12 months after a Fed pivot. So I think it's certainly possible, but for me, it'd probably be later in the year, like Q3 or so. But we'll see.
yeah, yeah. I'm not sold on the lows either, but at the same time, the timing is there in a sense, and at the moment too, it's just one of those things where just what you alluded to, you always got to be prepared for it to go lower. But at this point as well, we are a couple months into this year. We're a good ways away from that region now. So for the coming months here, it still has potential to see some more upside before necessarily coming back. Even if we do go back down to the lows and potentially make some new ones. At the moment, looking at Bitcoin from me, I mean, you covered pretty much your analysis is pretty spot on there too, with a lot of the areas that I'm looking at. I been just keeping it as simple as possible for this channel specifically too. One thing, as far as looking at the current price action and some of the things today, it was pretty wild. But we got a little bit of a range here. Obviously, we've been putting in for quite a while. One thing of note, which this is not a guarantee, but it's a little indication, right? When you get a lot of volume coming in at the bottom of the range, it's looked at as a lowercase b. That could, that's indicative of, continuation of the downside there. So just something, to kind of keep in mind. Once again, it's one of those things where you got to have your invalidation. So you got to start noting where losing certain areas, kind of make that start to become a reality. And you do have a CME gap down at 19 and change, I think. One thing about those, and especially this one, is that everyone is very focused on that CME gap. And I could be wrong with that, but it's just that seems like a very crowd driven target. So once again, just the idea of potentially pushing higher still is there for me. We've got a statistical target just above us here, that overall yearly pivot that all credit to Magic Internet Money in leading crypto Discord, right? It's he's been looking for that since end of November, before that area even generated, before the end of the year. In the short term, what did we get today? We got to push up right to our weekly pivot. So once again, looking at average of price, these are really nice areas to work off of in short-term trades. You get a lot of good opportunities around them. This is exactly actually where the high was today. So not only was that a great target to the upside, that was a potential short entry right back down to your point of control, right back down to your gold pocket. And this was a pretty big, just this one little move here was almost 5%. So 5% on Bitcoin is a good day, right? So and not only did you have the move to the downside, even just the move up, this was an easy target. Every week we're targeting that weekly pivot as we come into Sunday night 7 p.m. So that was a nice one. And just kind of zooming out a little bit, we've got the overall gold pocket area down here below us, which does line up with that 18.9 area you were just talking on. If we look at the overall high time frame range here that we've been in for quite a while, I'll actually go ahead and drag this over. Let's just update it, see if it's changed. Not really. It's kind of got a little bit more, kind of engulfed a little bit more region here. So we'll go ahead and turn that off for now. But this is a really big deal, right? This is the overall range we've been in now. And you see we've got the deviation down here. Obviously, as soon as you get back into the region, what did we do? We ran it up, rotated the range in full, broke out, got a deviation here also. So similar to how you were just noting some of the areas we're at right now, it's we continue to live in this region, this 23.4, realistically lose the current low right now in that gold pocket. Potentially we're targeting back down all the way to point of control, which is our natural target. And then you got this gold pocket lines really nicely with the overall range low, right? So when you get those just straight range rotations and you just basically just range it around, that is something to be aware of. So we are still kind of rooting around right here over at the overall high, starting to kind of live back in this region a little bit. Like I said, it did expand though, so this is a dynamic area, so this does change as time goes on right now, until we finally resolve this to the upside or the downside. But yeah, I'm still looking into potential 20. And the thing about this is that this doesn't have to be the end all be all target. We could very well continue higher for a bit, coming into that. So it's something you'd have to gauge as we come to it if we do. Otherwise, yeah, do realize that looking at this region, you do have that potential for the pullback to meet that CME gap. I do mention the idea of a little bit of a contrarian idea with that, and it goes both ways. The contrarian idea for the 19, I think it's like right under 20K, it's like 19.9 if I'm not mistaken. One of those things is that we push higher, right, and kind of squeeze out anybody looking for the CME gap from here, or we make it down to the CME gap and we continue lower, right? So that's just something to just a little speculative idea just to throw out there, because there's really nothing too crazy around that region. But yeah, so I mean, pretty simple for Bitcoin. I mean, this is definitely an area where you don't want to be going too crazy like entering at the moment. There's definitely some short-term trades depending on what you're looking for. Like I said, today was a potential 4% move to the upside and the downside, but you would have had to have that kind of prepared for. Could you catch this last move if this is going to push up? Very well could. Is the risk worth it to you, because this is that potentially that last piece of the move here. So depending on your strategy and your risk management, you got a potential 13% move to at least a statistical target above. Obviously, like I said, it could continue higher, but at the same time, you do run the risk of running all the way back down 20%, right? So obviously that always has to come to you. For me, I'd be looking to clear this weekly pivot in the moment, this 23,866, right? As far as any kind of a new entry idea. And that's just on a real, mid to long term, couple weeks idea here. If you're going to try to look to take this higher. But once again, just know where you're coming in at, right? This is something that's we've pushed up 60, 70%. Could very well continue up, but that's just where the risk is right now. So it's always a tough thing to combat.
It's starting to look like we could be getting a bit of an ascending wedge there on Bitcoin. Just this overall consolidation pattern could be developing an ascending wedge that would just be pointing like directly at that untapped 12-month pivot level you've got. I think that's an important level. I think I think that's a potential target for a top. But yeah, and that would fulfill both sides, where you go up, tap that 12-month pivot and an ascending wedge, which is a bearish pattern, and then potentially pop all the way back down to 18.9K. That'd be pretty painful to go from 26.7 to 19. And I know you've got tons of support at 19. I've got tons of support at 19. Yeah.
Yeah, no, it'd be interesting this for sure. See if we end up kind of doing something like this right now. But yeah, I mean it's a tough one, because I feel like there's so many that are on the side, not even sideline. Like I think many will struggle either way with, is it, are we going to have a huge crash? Is it, do I just dump my, my whole portfolio? And everybody's constantly trying to not lose money, obviously, whether that's, entering at an ideal opportunity, because like I said, this is something that has pushed up 60%, but who's to say we don't go, up to like 40K, over the next
Right,
couple of months or
right.
something, and then you miss out on another 100% or whatever the case is. You got to find those entries, as you go. And it's really got to come down to the risk management. And I almost hate even saying that, because it's like almost like a cop out to be like, oh, as long as whatever your strategy is. But it really does come down to that. For me, I'm not buying any spot entries here. And I didn't even, I didn't catch the bottom by any means. I will say that I actually traded Ethereum more than anything. I don't even really have too much Bitcoin. And even for ETH, I got the majority um, through, it was 1,200, right? So in this region, not $1,000 low, or what have you. Even when we came back to this region, I think I picked up a little bit in the 1,100, but the average was 1,200, right? So, but that's for a spot, long-term play, what have you. I'm not looking to really play around with, a potential 20% drop in this and that. Like, but when you're looking at the, shorter term plays, that is where it's going to come into effect. It's if you have some money that you're trying to put into the market and hoping to 2x it, and that's your rent that, you got to pay on March 1st, or that's your car payment or whatever the case is. And you entered, on these highs, and we've been getting pullbacks left and right. Then it's like, oh, now do I pull it out before I lose it, or whatever, or do I try to hold out on some of this and try to get some of these higher levels? It's a very we I think you called it wishy-washy time the last time we were on, but you really have to be pretty neutral right here, because you are coming into for Ethereum specifically, which obviously is going to bode well into the altcoins. Bitcoin is going to dictate the market in whole. But it really still comes down for me to this November high, and I know that that's almost getting annoying at this point to say. We've obviously got a new high recently, which we essentially is going to be our February high once we close out the month here in a bit. So realistically, the current high is going to be your the most notable area here. But if we don't clear this region and relatively soon, you're running the risk of just some major player just loading up a big short, pretty much up here at the highs, and then we come down. So it's where you're really at. So if you're not in a position from lower, you really do have to wait and see how some of these areas get reacted at. For me, I'm still targeting as a major area for Ethereum up here towards about 2,000. I don't think that that's where we'd stop if we did push up to this area. And you can almost just look left and just see, this region right here, which is even a little higher. Is actually, I refreshed a couple of other charts today, and there's another statistical target up here as well, just a bit above it, about $2,200. So it wouldn't surprise me to actually shoot up into this region. I think you've got a pretty nice 2,150, if I'm not mistaken.
Yep.
So that still remains, the big targets for me. Do we pull back once again, below monthly pivot, potentially down to this 1359 area before we do that is the question. This would be, we talked about this area being pretty lush, right? If we came down to it. If I'm, squirt gun to my head, however, I still think that we push higher first before we come down. Even like everything is here, the recipe is here. I think that everybody's trying to short this, or everybody's hoping to get that pullback and get in. And I don't know that we're going to get it. So that's at least right now. So that's just that can change obviously, but that's where, like, if a gut feeling was out there, that's what it would be. But not, like you said, not marrying that, just prepared for it.
Yeah, I'm in the same camp. I'll throw on my ETH chart here real quick, and we'll go over to ETH. One of the things that I do want to bring up, I think you covered the levels perfectly. Love that we've got real. I mean, so I've talked about in the past, 2,000 up to basically 2,160 or so. I think you've got like 2,000 to 2,200. So like very, very similar levels, very similar zone of potential resistance there for ETH. And then I believe I've got like 1,340 to 1,350. I think you've got like 1,350 to 1,360. So it's like very, very similar levels here. So for me, like this is just the range that I'd be playing. And again, like we talked about, being neutral here. Like, yeah, as far as I'm concerned, this is where the support is at. And if we wanted to really, get a little bit, more symmetrical here, right? You say this is my zone of support, this is my zone of resistance, and I'd just be looking to play this range. And pretty much this was a massive deviation. And then we got price got rejected from below $1,200. Yeah, we spent some time consolidating there, but overall price was not sustainable down here. What is interesting to me of this entire bear market pattern, though, what you'll note in terms of length of time that we've spent in this zone, right? Since we've popped up to around, let's just call it our big psychological level of $1,500. Right? Let's say $1,500 is our psychological level. We have now spent, with the exception of a couple of little wicks down here, which got rejected, right, and held as support, we've now spent about 50 days or so. We'll call it 45 days. 45 days with Ethereum's price above $1,500. That, to me, is very different than what we saw over here, than what we saw with all these other peaks. This is price acceptance. The market is accepting an Ethereum price above $1,500 and it is sustaining it, right? So that is one of the reasons, among many others, that just are tilting me in the same direction as you, just tilting me towards probably an upside to $2,000. Now, it's an extraordinary, like the market right now is just insanely complicated. Like over here, I was feeling very similarly that we had broken upwards. We had started to break, a bunch of downtrend lines. This was looking bullish. We were talking about CPI readouts, and CPI just completely, came in soft, and the S&P 500 ripped. And basically, we nailed everything except for FTX came in, right? And FTX is what sent the market back down. So in reality, I was of the opinion that if we did not have FTX, Ethereum would have come back up to already have tested these levels, right? But instead, FTX came in, we topped out, risk came into the market, and we've just now recovered these levels. So we're sitting right where we were before FTX collapsed, and we've just reaccepted this level as the accepted price for Ethereum. So I think, ultimately for this to go back below $1,500, there has to be a fundamental shift in the overall market. And that could very well happen. There is risk of that happening, but for me, I do lean more to the upside. But I am very similar to you, Paul, in that I'm not buying here. I am have already accumulated lower, letting this ride up higher. But at the same time, I'm not excited to take profits at $1,634 for ETH. If I look at ETH from a fundamental perspective, if I look at it from a longer term perspective, I think selling off of one move upwards here it's not exciting. Could it end up being the right short term move if we come back down to revisit the bottom of this range? Yes, certainly. But ultimately, I'll just buy more here. I'll just add my bags in this 1250 to 1360 or so range. I'll just be looking to bid here, and then as far as short-term profits go, I think taking some risk off at $2,000 to $2,200 is probably the right move. I still, because I'm very bullish on Ethereum long-term, I won't sell my entire bag at, $2,000. I think that's a little bit premature when you look at Ethereum in the long term and where it could, potentially go to next bull market cycle. But that's just kind of where my headspace is at for ETH. It's to really simplify it here. And I know I've just kind of drawn out these levels, but basically they're, I'm not just drawing them for the sake of drawing them. I'm drawing them based off the levels that Paul has, based off the levels that we've gone through and gotten with our margin pressure levels. I just wanted to draw them rather quickly, but overall we're just in a range here. You look to take profits or trim at the top, de-risk, whatever you want to call it, at the top of a range, look to add towards the bottom of a range. So that's where I'm personally at the moment. We want to jump into some alts.
Yeah, absolutely. I do want to point out just something too. For anybody that utilizes time-based analysis, right? The end of the quarter last month, right, is almost, I don't want to say almost always, but is one of the most explosive time frames. So we're coming into March. Last March was actually basically the high of the year, right? We went from for Bitcoin. I don't know if you can still see my chart here, but if you can,
Yep,
I'm just
yep.
okay.
Your
I'll
chart's
just
up.
speak it out anyways. But we started obviously the year in this region, so basically taking that pretty good hit right here, and then we kind of trickled up for quite a bit. March, end of March, right at April 1st, 2nd, right here. Obviously, was the high of the entire year before we continue lower. We tend to see December's, September, like a lot of these last month of the quarter, just a straight, just speculative thing to throw out there. It's not obviously 100% hit rate by any means, but it is something that I pay attention for, and it is something I think that's worth note because we are about to close off this month, being walking into March, walking into the end of the first quarter, and obviously we've had a pretty explosive month as it is. I'm sorry, quarter so far, but I think that there's potential to see a pretty decent March as well. So that's just something, once again, just to kind of keep in mind, whether that means it's even when you think about the whole sell in May, walk away. Like obviously that's not at 100% hit rate, but that's got some legs throughout history. So March is a pretty good month, that I've noted at least. So just want to kind of keep that in mind. But yeah, let's jump into some more altcoins and see what we're looking for.
Yeah, I think we had a request for Matic, which is
All right.
in a bit of a pullback. I'm actually in a pretty decent Matic short. I shorted $1.50 or $1.49 to be exact. Just $1.50 being a big psychological level, and there was margin pressure level there. But I'll let you cover it, and then I'll jump into Matic as well after you.
Yeah, so Matic is definitely one of the better performers. Let's just see from the low. What is this? Oh, it's June of last year. So didn't really, 400% from the June low. So didn't really have a November crash compared, to the majority of the market with FTX and everything. But I've really just been looking at these few areas here. As we come into them, they've been really getting it pretty well. We had a coming into the year untapped yearly pivot as well. Obviously, is a big area we look for. Average of price from the entire 2022. You can see how well respected this has been. We breached into this previous range here, so this is an area that throwing on some confluence with the overall high. We've got another yearly pivot up here from 2021, technically generated on 2022, but pretty big area up there, like 185. Got a gold pocket up here. You've got the overall range high. You can see pretty much that we just ran it right into the point of control, which is going to be your natural target when you enter these ranges. Just going to throw that on there. So very key, to take profits at these areas as you come up to them, because we very well not just, you may not always just run the range, right? So you come into this region, you got a natural target of the point of control, basically you got your EQ after that. Obviously you can dissect a few other targets in here. For me, I'd be looking for 184 next, and then the overall high. And then we've got the 2022 year open all the way up here, 253. As far as downside, I agree that, we got a really nice gold pocket just below us. Basically, you're looking to lose 123, which is that yearly pivot that we were talking about earlier. Obviously, if we flipped it into some support at the moment, but if you come through and lose that, this region will become a major target for me. If you kind of box this area off, right, the old range that we were in, you can see that this is actually the overall high. This is actually an untapped monthly pivot back here. So this is an untapped average of price that we have not come back to. Very high statistical hit rate of 80%. Not, once again, there's 2 out of every 10 that I'm not going to hit, but there's some likelihood to that, and especially when they stack up with a couple of other areas, including the gold pocket, right? So that's right at $1.02 $1. Then you got the overall point of control from that previous range down to like 92 cents. So this whole region would be an area for me to look for a pullback potential. We've already made it pretty decently down to it. But this is still another 20% away. So Yeah, that's what I'd be looking for out of Matic. I mean, as far as upside, I'd want to see 135 reclaimed. And then from there, I'd try to take it up to these areas up here about 195. And at that point, you're really coming into like all-time highs even on Matic. So the area for me, as far as any kind of all-time high, obviously you've got the highs here, but if you claim that yearly open, once again, this is for last year, we were probably off to the sunrise there, um, which is potentially going to be the chain link of this bear market, right? If that was going to be the case. But aside from that, yeah, very simple. $1 as far as downside, as far as upside, $1.35, claim that, and we're going to probably run it up to at least $2.
Nice, nice. I've got real similar levels as well.
Always.
Yeah, I'd love to see it. All right, let me cover Matic. So I am currently in this short still, and my rationale for shorting here is very, very simple. Let me go to a logarithmic chart. So obviously $1.50 is a key psychological level. I know it's not marked out on our indicator here, but this has 75 cents, a dollar, $2.50. $1.50 is also going to be a key resistance level. So as soon as Matic goes above 150 and it ticks up to 151, there's tons of research to support the idea that bidding stops at 151, or there's significantly less buyers at 150 and 151 than there are at 149. So 149, it ticks up to 150, 151. Those buyers start leaving the market, which can cause a bit of a reversal, which is, we were up 100% from this last swing low at around 75 cents. Speaking of that, if we throw on our long margin pressure levels here from that last swing low, that gave us additional confluent resistance at 149. That's where I personally took my short. And that was enough. That was enough. I'm still actually in this short. I have not closed it yet. And the reason being is because we have now broken that downtrend line and held resistance on top of it, right? Or I'm not on top of it, on the backside of it. So we've broken below it. This is a very, very common pattern too. This is actually what I was talking about on DXY earlier. And I feel like I brought this up last week and was trying to find an example, but I couldn't off the top of my head. But you have your uptrend, holds, holds, holds. And then after it holds, you get that clearance pump, which is part of your top. You drop through your trend line, back test it, and then go further down. Now, one other thing that let me just show you for anybody that is curious, the same exact pattern on DXY. Uptrend, holds. You get this massive clearance pump. And then when you slam back down into your downtrend line, you don't hold on to it. You drop below it and you back test it and fail that back test. Or a failure of that back test usually results in further downside. So kind of on a different asset here being Matic, but still TA is going to usually be somewhat consistent across multiple asset classes, and much smaller time frame here. But we held support, clearance pump. Once you get that clearance pump in the break of that trend line, fail the back test, you're looking for a move further down. $1.25 could be an interesting level, right? That's going to be a bit of a psychological level. It's also where we kind of held resistance here. Held support here. So we could get a little bit of a support here, but it does look like we've failed that retest on the backside. So I'm personally targeting levels a little bit lower, very similar to what Paul had. If I go with our long margin pressure levels off of this entire consolidation range, we get 103.5, which I believe that golden pocket Paul brought up was between 103 and 106, and then he had a key level at around 101. So all in this entire region here. Again, very similar levels. Let me get this rectangle tool. Somewhere in this region would be where I would expect to find some support Not saying we are going down there, but it definitely wouldn't surprise me. And I think that's the level that you'd want to start bidding at. Not only that, but again, if we throw on our price bias levels, our psychological levels, you've got that support coming in around $1, right? So as soon as Matic ticks down from $1 to 99 cents, it starts looking very cheap. You've been conditioned psychologically through your entire life looking at various advertisements to think that 99 cents is cheap for something. Whether it's a cheeseburger from McDonald's or one Matic, your mind automatically thinks that 99 cents is a lot cheaper than $1.05 or $1.03, right? So we'd absolutely see this dip below $1 and start popping right back up. And that's actually where I would be interested, not only in closing my short, but changing into a long in that region. The last thing I'll say on Matic is I do want to draw your attention to something that I just talked about on Ethereum. And this is this idea of this consolidation range, meaning or equating to price acceptance by the market. The market is accepting the price of Ethereum over $1,500. And that's what we really saw with this range for Matic. Price was being accepted over 75 cents all the way up to $1, but it was not being accepted over $1. We got this deviation off of some like Disney partnership news or something, and then FTX came in and we went right back down to test these levels. But price was being accepted at 75 cents. It was getting rejected at $1. $1 seemed expensive. Now we've ripped through $1. If we come back down, anything under $1 is going to seem very cheap. And we will, in my opinion, very likely find some support around $1 if we go that low. So that's Matic, very similar levels. Cool. Any other charts?
I was gonna cover mana, as somebody mentioned, just to kind of touch on that. I touched on that one last time, and then fetch, FET, and then I don't know if you got GRT, but somebody's asking about that, and near, which I love near. But yeah, mana, I still think has a really nice potential. And one of the biggest things about mana that I love to point out right now is that you got this almost stupid clear, which can play out. Don't get me wrong. Head and shoulders pattern, right? That if you're not looking at this in the sense of, not even if you're not, but this is going to have confluence either way, I suppose. So, right now we're sitting on top of our range, right? So it's very similar to when you break out of a pattern, or a trend line, right? If this was a trend line, you're essentially flipping this into support at the moment, right? And if you lose that, we always look for basically the reclaim. So you would essentially be breaking back into this range, reclaiming it, get the back test, whether it be from the bottom or from the top. One thing you don't want to see, and unless you're shorting, of course, but is the break back into this region, which right at the moment is about 64 cents. And then the closure, this is on a daily time frame. See the daily back in there, and so then we start running the risk that we're probably going to see some of these lower areas. Once again, you re-enter the range. Your natural target is your point of control. This head and shoulders has some pretty nice confluence actually with that if we were to see it break. But one thing I did want to point out is that on the daily time frame, you see how we just wicked, still just wicking in. So really don't have that break in that that we're still holding support, I guess what I want to say. We've seen this time and time again. I actually just pointed this exact same trade out on near recently in the group. We had basically our little neckline of that head and shoulders was a monthly open. So if we lost the monthly open, that was our trigger regardless. And it just so happened to be that neckline just like this. What did we do on that near chart? And I'll show you that in a second if we have time. But you basically just did this and then you ripped higher, right? Just stopping at anybody prematurely trying to catch this head and shoulders pattern. For the head and shoulders, however, you would, extrapolate a little move here from your head down to your neckline, right? Give or take. And then you put it down in this region and you would get a move, potentially down to the gold pocket. So one of two things, if we re-enter this range, the gold pocket and the point of control are going to be your targets anyways. It's just interesting to note that how they line up, obviously, with that pattern. However, this is really, really clear, really obvious. And potentially gets ran back. So right now you are at support, and one of the things to look for the upside, you're right in between two ranges as well. So you're literally sandwiched between. Breaking into this region here, is going to be the more ideal situation, 77 cents. Up from here, we've got an untapped monthly. You got your point of control. We've got an overall support coming into this region. And then one area I really like is all the way up at about 137 and 141, coming in at the yearly pivot and a quarterly pivot. Obviously, this is something that you could almost front run. You'd be going against the grain right here in the sense of buying, this support at the moment. You just really have to know that, if we start closing back in here, you'd have to cut that bag in assumption that we would come down to these regions. If we get a pullback, obviously out of Bitcoin and Ethereum, obviously that lines up pretty well with coming down to these areas as well. Looking at something like Matic, when you look and anticipate another 15% move to the downside, these can happen. These are some pretty big pullbacks though on Mana. So if that was to be the case, I'd probably have to imagine we're going to see some, market pullbacks across the board. But I do want to point out that we are at support. We actually are holding, the overall range high pretty nicely. And this still has potential to shoot into this region here. So yes, to answer the question, I do still think that there's a potential move here at a Mana. But just realize if we start closing back below 64 cents, that we, can see some downside. Fetch. If this is Fetch AI. Fetch 10x from November. And that's pretty massive. Probably not the number one, the first thing you want to jump into at all, right? However, it's one of those things that, can keep going pretty crazily. So if you're in a position, this is kind of more so for you. Otherwise, I would, personally, I would look for something else. Like if you're looking to get into Fetch, jumping into something that has 10x in 2 months, 3 months is, not the best move. Granted, like I said, there's potential to keep going, but you've probably missed that boat for the most part. Downside to, from here is, from our local low to high, we've got a perfect gold pocket, lines up with the yearly pivot. I have to imagine if we start making our way down that this is where we land. It's a pretty big move, about 50% from where we are, even though, like I said, you had a 10x move up. So even if you saw that would be like a 60% from the high. Not out of the question. Definitely a better area if you're looking to do anything. Look for something in this region, but this was a really nice move. Ran it right up, quarter 2, 22 high, got it really nicely. And from there, I looked for the next relevant area, and it was really this, this quarterly at 72 cents. So I bring this up because as far as the next target, so this is already 10x. And, the next major target, in my opinion, is potentially 50 to 60% higher. This is, something that's, in my opinion, you have a possible 50% move to the upside, possible 50% move to the downside. So depending on how you set yourself up, that's probably not the best move, in my opinion, but it's there, potentially for anybody that wants it, I guess, or if you're in a position already. But this quarterly level is really, really nice. If you come out to the 3-month time frame here, you'll see exactly what I mean by it. So we have not closed a 3-month candle above this region since basically ever, actually. But we've not been back up to there, since quite a bit. But you can see how this has been regarded really nicely. Also comes in as your macro gold pocket. So 2 things here. One is that this is a major target on the upside. And if you flip that to support, new all-time highs, are probably coming. I'm not saying that would happen now. Potentially you run it up to this region and get a harsh rejection up here, and then you start looking for the potential. Let's zoom back out. Let's just, for instance, say we run it up to that area and you get a pretty hard hit, and let's just look for the gold pocket off that region. Right, you're talking about coming, same thing. You're going to be looking at like a 50, 60% pullback, which is not going to be uncommon. You'd still be up several 100%, 400, 500% from the low. So it's just whoever's going to be catching the bag at this region is just going to be getting hit the hardest. So potential for the move up, definitely there. big target above, potentially more so a short opportunity more than anything. Yeah, that's what I'd be looking for. So 1, 2, let me just take that off for now. Excuse me, 1, 2, 3. There's 5 areas, 5 levels that you can mark off and set alerts for on Fetch, in my opinion. GRT, do you have a chart for GRT by chance?
Yeah, I can cover GRT.
Cool.
We'll share my screen here. We'll cover GRT. Well, not FRT, GRT. All right. So one of the things on GRT that was a trigger for moving upwards was, obviously this AI narrative in line with Fetch AI, and a lot of these other AI based coins. GRT, I don't think it's an AI coin per se, but it definitely benefited from that narrative. But one thing that was very apparent on GRT was this bullish divergence on the weekly. And that is definitely something that you want to pay attention to on other charts. I think we're seeing it on Chainlink right now, and it can take a really long time to develop, right? By the time we'd put this in, we'd put in pretty clear bullish divergence after about 189 days over here, right? But we started ticking up, and it took another, call it 35 days, over a month, for this to really develop into an uptrend. Or at least spark an uptrend. So it's something to keep track of, but it doesn't necessarily mean that it's just going to immediately start running. But you start to see where price is moving downwards, but the strength of the buyers is starting to creep back in by virtue of that RSI. All right, so I want to throw on the easy bands here and just demonstrate just how overbought we actually are in this. Doesn't mean it can't go higher, but if you're looking to buy GRT on for a longer term position, I would definitely caution against that, especially when this has just been in just straight downtrend mode. The vast majority of this token's life has been in an absolute downtrend. 686 days of downtrend, and you've had 35 bullish days and another 37 bullish days of uptrend. Everything else has been generally trending down. So really stop and consider what the history of a token has been before just aping in at what could very well be a top. Now, just looking at this straight up, I mean, it seems completely fine here. You got a strong move. You've got some consolidation. This could be a bull flag. Yeah, this could make another move upwards. This could start grinding upwards and pushing this trend back upwards. That would be great. But that happening, the risk reward on realizing a scenario of further upside for the graph is just so atrociously bad when it's sitting at 16 cents, right? Versus if you were buying at 5, 6, 7 cents. I do want to go to CoinGecko real quick, and I'm going to go to the graph, and it's number 41. It does have a infinite maximum supply, meaning there's some inflation here. I don't know what the overall inflation is, but 88% distributed plus whatever tail emissions are on it. Could it potentially be, can potentially run? Certainly. So my brother actually used to work at Chainlink, and he said that everyone there pretty much complained about the graph. It was just not a great product. And that what is actually a competing product and potentially a better product is Space and Time, which doesn't have a token yet, but this is a project definitely to keep your mind on, or to keep your eye on in case they do drop a token. So decentralized data warehouse, Web3 native SQL for smart contracts. So there's some similarities there between this and the graph. And this is where, as somebody who's, basically runs a research company in the crypto space, I'm looking for the better risk reward opportunities. And I look at something like this, and, from somebody who, like my brother worked at Chainlink, and he's like telling me Space and Time is way better than the graph. It's way more interesting, way more compelling. I have not done a deep dive on this. I have not done a deep dive on the graph. But when I get that information and I see this hasn't even dropped a token yet, and maybe they will, I'm paying attention to this as that higher risk reward opportunity versus jumping into this narrative in something that is, overbought at this current period in time. So I know that wasn't very useful in terms of giving specific TA levels. If I was looking to get into the graph, I wouldn't even think about touching it until it gave a full mean reversion back down to the 21-week simple moving average and look to hold that as support and then get in. Otherwise, I'm just not particularly interested in investing in the graph right now. From a trading perspective, I also think unless you're really particularly looking for short opportunities, then the graph is there's other stuff that's far more attractive. I think you can find better risk reward opportunities in the market, as far as longs go, with clear invalidation points, like Paul just went over Decentraland Mana. I think that's a great potential long opportunity with a very clear invalidation point, whereas the graph has quite a long ways to go down if it does fall. I mean, just a simple mean reversion here, you're talking about almost a 50% pullback from all-time high. You're talking about 60 to 70%. We did have the actually, no, that's not bearish divergence. RSI is looking fine, actually. And if anything, we're potentially going to get bullish divergence here. So you can certainly make a case that this goes back up higher. But again, risk reward for me is just not there on a long on the graph at this moment in time. Stop sharing there. Cool. Do we want to close it out with near protocol?
Yeah, actually, I got that pulled up right now. So, excuse me. So near, sorry, near has been a pretty big fan favorite in in our trading group, and just because it's really traded very well. It's a newer coin on top of that though, so it's something that you want to keep in mind. Doesn't have a ton of history. Looking at this, some can start to point out like a head and shoulders basically forming on the overall pattern and what have you. And that takes like the price down, like one of those Bitcoin famous negative price actions. So I obviously prefer to look at it, through range data. I'm looking at this from all the price action wrapped up into one in a couple of different, aspects here. So on our current area that we're in right now, obviously we've got our year open where we jetted out from. We've got a nice local high. There's a local gold pocket back down by the point of control, which is something, to kind of keep in mind. We had our monthly pivot, which was at untapped as we came into it. So obviously that became a natural target for us this month. And really that's, the current line in the sand for any potential downside right now is like 211 currently, right? So for that, lose this region, obviously we got a couple of targets right below us. My personal, even if you do get that, I'm really targeting up here pretty heavily. There's an untapped quarterly, which once again, 3 months average of price. It's a long time to be, creating these areas. The market is very efficient and it tends to backfill these regions, right? Like you just said, a mean reversion. So it reverts to the average of price here. It is right above this gold pocket. And on top of that, we do have fib confluence with a harmonic pattern. There is a butterfly here that completed at the end of the year, which if I have it somewhere, I think it's here. So this is a pattern based on Fibonacci as well, with certain extensions from the regions here. And when you do get the completion, it is a pretty decent ride back up to your B leg, which is essentially your old range here. And that obviously lines up with our gold pocket, which tends to do that in general. Right? It's usually your gold pocket area. So from here, this is a really big target as we come back into it. Right now, it's like a 60% move away. Do we get a little pullback into this gold pocket first before we head up to that is the question. But for me, I'm at least targeting, up to this $4 area for near in the short term here. And then we do have, the potential to just run this range in full. We got 770 comes in as our yearly area. And then we've got the another quarterly area up here as well and the range high. So that would be the little stair step as far as to the upside if we get it. Main target, like I said, being this region, just about $4, give or take, in this little window here. Yeah, aside from that, I mean, we pretty well protected in the short term here. Obviously, we got our areas to the downside as well. Your current low is your yearly open too. So I mean, that's a pretty good indication. If you lose that, we probably see some pretty decent move to the downside. That's already a substantial move lower, so you probably want to start preparing for that. I would say if you lose 171, which from this region is a pretty big move away, 25%. Obviously, first line in the sand, like I said, is going to be that monthly pivot at about I think it's 211. Start being, remain cautious as we make our way down to this region. If you don't get a decent bounce out of here, then yeah, potentially, obviously the whole market would be in trouble at that point too, because this is no easy move, 40, 60, 50%. If near is dropping like that, you're talking Ethereum is probably taking a 25% haircut, Bitcoin as well. But yeah, as far as me, I'm still, looking for upside. This is actually that gold pot. I'm sorry, what was it? The Head and Shoulders that I was talking about the other day. I'm sorry, talking about earlier today. Stumbling here. So this was a really perfect example of what I was just talking about with mana. I'm gonna turn off my butterfly here. But this is what, anybody was, if you were looking at this as a Head and Shoulders, right? You had a nice little neckline coming through here, and you got your little shoulder, you got your head, you got a perfect other shoulder right here. But like I said, that neckline really comes in you had a little cross right here. And if you would have lost this region and got the back test of the monthly open, which was our key level at the time, that would have been your indicator, for potential more downside. We did have our monthly pivot just below us that was untapped at the time. So that was a target, obviously, on here. But more than anything, we were at support, so you had to anticipate, continuation upward. And anybody that entered that, too prematurely, you got this straight move right past the highs, took the high, back down. Now we hit the monthly pivot. And then where we at now, we're back at monthly open. So it's a dog eat dog game in world out here, right? It's literally a game of taking somebody else's money every step of the way. Obviously these play out, at times, the Head and Shoulders or some of these patterns. But personally, I'm always trying to stack them up with our levels as well, just to see, how they compare. And then look for these regions here. And this is the overall range that, like, from all price action. So what I was targeting at this region at the time was actually this, a little bit above this, which was the current range high. Let me see if I have it on here. I'll just go ahead and pull it up fresh. Pulling it up fresh. Let's see what she looks like here. Yeah, there it is. Okay, so this was your Q4 range. So we were targeting the high. And once again, just a really, really clean, obviously we front ran it just a bit here, but this kind of gave us a little bit of the edge to, identify that this was probably not going to play out, right? We hadn't rotated the range in full. You had almost too clear, Head and Shoulders that most people were going to look for. I'm pretty sure that the target of that measured down to the gold pocket. Yep, exactly. So so many breakout traders were probably, presetting and prematurely entering shorts just to get, pushed out in that move. And then obviously we front ran the gold pocket to the downside. Why? Because you had your monthly pivot there. Like I said, untapped at the time, big target for us as we came into it. And now we're rooting around this region. So yeah, upside wise, I talked about that $4 target in the short term, flip 292. And I think that the $4 target is very much on deck at that point. And then potentially all the way up to 770. And I mean, that's a pretty big move, 200%. You'd have to imagine that we'd have to be hitting some pretty big areas on Bitcoin and Ethereum, but definitely not out of the question. Yeah, that's how I would approach near. Hope that makes sense.
Yeah, yeah, absolutely. I'd love for us to pop up to those some of those higher levels up around $4 plus. That 12-month pivot at 770 looks looks pretty nice.
Mhm. Yeah,
Would
it seems
love
pretty
would
far
love to
away.
see some of that.
I'm
Yeah.
sorry.
Well, cool. I think we're at our hour. As usual, it's awesome having you on. I love getting a different style of TA on here. I know people in this stream are finding it extraordinarily useful to tune in on these Mondays. You've had some incredible calls lately in the last couple of weeks as well, especially with Filecoin. So I would urge people to go follow you on Twitter, CVO Crypto at CVO Crypto, and then on YouTube as well. Go subscribe, Leading Crypto. And if you're not subscribed to this channel, please hit that subscribe button, drop a like before we head out here. Any parting words before we call it a day?
Nope. Just yeah. Tomorrow is a monthly close, so that always offers up a new batch of key levels for the coming up week. And yeah, I think the next time we see each other, we'll have a good idea if we're gonna be pushing higher or lower in the coming weeks here. Getting to the end of that range right now, so.
Yeah, yeah. I mean, to sum up the stream, I mean, honestly, I think you said it best was that we're just, you got to be kind of neutral right now. And we've got very clear downside targets. We have very clear upside targets. And it's really just a matter of which way we move. And it sounds like, people say, oh, you're talking out of both sides of your mouth or whatever. But it's like, no, like there's literally some times where you've got to be neutral, and the market is in a very neutral place, and it hasn't necessarily shown its hand yet. So I think I love when we're on the same page, because it usually results in more accuracy or whatever. But guys, thanks so much for tuning in this evening. As usual, like, subscribe, and we'll catch you next time. Paul will be back on next Monday as usual.